Picture this. You're watching your ADA position, and suddenly you notice something that makes your heart skip a beat. A falling wedge pattern has been quietly forming since early September, and renowned analyst Ali Martinez just dropped a bombshell projection. We're talking about a potential breakout to 94 cents. That's a massive 13% surge from current levels. But here's the plot twist that nobody saw coming. 74% of Binance traders are positioning long on Cardano right now. That's a 3-to-1 ratio of bulls versus bears. Either these traders know something we don't, or we're about to witness one of the most spectacular bull traps in recent memory. Alright, let's dissect this situation piece by piece, because the devil is always in the details when it comes to cryptocurrency analysis. Since early September, ADA has been trapped inside what technical analysts call a falling wedge pattern. For those new to chart reading, think of this as a funnel that gets narrower over time. Price action gets squeezed between two converging trend lines, with each swing creating less dramatic moves than the last. The beautiful thing about falling wedges? They're historically bullish continuation patterns. We're talking about a setup that has triggered massive rallies in Bitcoin, Ethereum, and countless altcoins throughout crypto history. The compression builds pressure, and when that pressure finally explodes, well, that's when fortunes get made. Ali Martinez, and if you don't know who he is, you should has identified the 94-cent level as the primary breakout target. That's not just some random number pulled from thin air. It's calculated based on the height of the wedge pattern projected upward from the breakout point. Technical analysis 101, but executed with surgical precision. The question burning in every ADA holder's mind right now is this: can Cardano actually break through the resistance that's been capping its price for weeks? Binance, which is the world's largest cryptocurrency exchange by volume, gives us a pretty unique window into trader psychology through their long and short positioning data. But here's what makes this even more intriguing. This positioning imbalance has persisted throughout the wedge formation. These aren't panic buyers jumping in at the last second. These are calculated positions held by traders who've really done their homework and are willing to put their money where their analysis leads them. The leverage factor adds another layer of complexity. When 74% of traders are long with leverage, any breakout above resistance could trigger a cascading effect. Successful breakouts often lead to short squeezes, where bearish traders are forced to buy back their positions, adding fuel to the upward momentum. Given the bullish positioning we just discussed, this outflow pattern suggests the latter. Smart money isn't just buying ADA, they're removing it from circulating supply on exchanges. Basic economics tells us that reduced supply, combined with sustained demand, creates upward price pressure. Technical analysis tells us one story, but fundamentals provide the foundation that either supports or undermines those patterns. In Cardano's case, the on-chain metrics are painting a picture that's honestly remarkably bullish. Cardano's DeFi ecosystem, often overlooked compared to Ethereum or Solana, is quietly demonstrating remarkable resilience. The total value locked across Cardano's decentralized protocols currently sits at $487.18 million. That number jumped 2.15% in just 24 hours. Why does TVL matter? It's a direct measurement of user confidence and capital commitment to the network. When investors lock their tokens in DeFi protocols, they're making a statement. They believe in Cardano's long-term utility enough to risk their capital on smart contracts and yield farming opportunities. This isn't speculative trading. This is productive economic activity happening on the blockchain. Real users, real transactions, real value creation. The decentralized exchange activity provides even more compelling evidence. Daily DEX volume on Cardano reached $4.68 million, while weekly totals surged to $25.56 million. That's a 19.18% week-over-week increase in trading activity. Rising DEX volumes often serve as leading indicators for broader market recoveries. Why? Because DEX activity represents organic demand from users who are actively participating in the ecosystem, not just speculating on price movements. When someone swaps tokens on a Cardano DEX, they're paying network fees, contributing to validator rewards, and demonstrating that the blockchain has real utility beyond just being a speculative asset. That's the kind of fundamental strength that sustains long-term bull markets. Let's synthesize all this data into a coherent picture of what's really happening with Cardano right now. We have growing DeFi TVL and surging DEX volumes demonstrating increasing on-chain utility. That's the fundamental backdrop. Each of these factors alone would be noteworthy. Combined together, they create what technical analysts call confluence, multiple independent signals pointing toward the same conclusion. The 94-cent target isn't just a number on a chart anymore. It's the focal point where technical pressure, market positioning, supply dynamics, and fundamental growth all converge. The 94-cent target represents more than just a price level. It's a test of whether Cardano can transition from a prolonged consolidation phase into a sustained uptrend. Success could open the door to much higher prices. Failure could result in an extended period of sideways action or worse. For ADA holders, the next few trading sessions will likely determine whether months of patience finally pay off, or whether this setup joins the graveyard of failed breakout attempts that litter cryptocurrency charts. The smart money has made their bet. 74% of them are betting on the bulls. The question is, are you ready for what comes next? This video is for educational and entertainment purposes only and should not be considered financial advice. Cryptocurrency investments carry significant risk, including the potential for total loss of capital. Past performance does not guarantee future results. The analysis presented represents my personal opinion based on publicly available data and should not be construed as investment recommendations. Always conduct your own research and consider consulting with qualified financial professionals before making investment decisions. Never invest more than you can afford to lose, and be aware that cryptocurrency markets are highly volatile and unpredictable.